Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So currently we do not see really big changes there. Mostly the setup that we were talking about and have discussed yesterday and the weekly report stands valid. So market is still calling in a tight range after hitting the daily oversold last week on Friday. So since then euro has shown the minor retracement, and yesterday was an attempt to drop further. It's downward continuation. Currently, guys, there are two important moments. From the fundamental point of view, Europe stands right now is really frightened by the rising of the tariff spiral among the China and the United States and European. As I said yesterday, the European investors already transformed this in Europe, and they just scared that United States will follow with the same policy in relation to European Union. That keeps euro under pressure and increased demand for the United States dollar and Japanese yen. So today we see some relief, but this is, I think, will be a long-term story, and hardly it will just will be over occasionally. So I think that will be some continuation, and it really could last for a considerable period of time. From the technical point of view, euro currency right now actually has no real strong support below market. The next support stands in the 1450 area as weekly fib level. Market right now not that they were sold on as on the weekly as on the daily chart, and it has relatively free space for approximately 100 pips lower. That's why currently it's very difficult to expect some real reversal of bounce, significant upward bounce, or something of that sort. So major action, at least following the logic of the technical picture, technical analysis, should happen after the reaching by market the major support area. So that's why currently we do not see any signs that could confirm the opposite view. So as you can see on the daily chart, within the recent sessions, this bounce up market again has completed the same harmonic retracement as minor retracement stance, but still it stands mostly in some tight consolidation above these lows. On the 4-hour time frame chart, guys, this consolidation takes the shape of kind of the broadening bottom, broadening triangle, and this pattern has the feature that the first direction usually stands according to the breakout. So if market breaks lower bottom, price action usually is falling to this direction. So the same stuff as with a simple triangle, with a narrowing triangle. In general, the consolidation above the previous lows, this is a bearish sign because when the market doesn't show the reversal and stands very tight to the previous lows, it means that it's building energy for a possible breakout. Because usually if market reverses up, it should reverse. It should not show this tight consolidation above the lows and just reversing and continue move higher. But when this hasn't happened, it means that probably another attempt to break down these lows should follow. On the hourly chart, we see side-by-side patterns. This was our yesterday patterns. Market has completed free drive sell, and probably it's possible to take the short. This downward drop has been completed. Now market again stands in the ABCD action up, and another cartridge triple to sell could be formed. Take a look at the difference of the downward action and upward action. So downward is very straight and fast here and here as well. Upward action is very choppy and slow. This just tells us that this is just a retracement, not a reversal. Particularly speaking, guys, we actually do not care how deep retracement here will be. because our major pattern stands on the daily chart as butterfly. The one thing that we would like to see is that market stands below this top to keep butterfly valid. But whether market will hit the 3.8 resistance or 6.18, this is minor thing. This is not very important. And currently we do not see the signs that this butterfly could be broken in nearest time. So that being said, for the daily traders, nothing has changed. Just wait for completion of the butterfly, and depending on the manner of the price action, how market will hit the major support on the weekly, we will make the decision on whether we should take the long position and whether the bounce to the 120 area will happen or not. Because currently this is our basic scenario that upward bounce should happen. For the intraday traders, just trying to catch the clear patterns for trading. And do not forget to manage position. So, for example, if you have taken position on the completion of the guarded steeple to sell, market starts move down, move your stops to the break even. Take the half of the profit at the nearest support, for example, 30% or 50%. Take the half of the profit, move the stops to the break even, and just watch what will happen next. So the same could be done with this ABCD if it will be formed. I mean, this guarded steeple to sell. Also, guys, why I think that the situation in the euro currency is not really as simple as it could seem on the first glance. I would like to show you DAX chart. This is the major Germany index of the equities. And it's really very impressive picture. It's very important for me because currently I'm mostly dealing with the equities in Europe. So take a look at the weekly chart of the DAX. So this clear the hand shoulders pattern is forming. This is weekly chart, guys. But right now, take a look at this. You could see, if you can't recognize on the weekly chart, I will show you the same picture on the monthly. It's very impressive, guys. So this head and shoulders that we see on the weekly chart is the top of the head of the larger pattern on the monthly. So that will be a really miserable collapse on the market, on the stock market in Europe within the few years. So firstly, we will take a look at the weekly. So this drop probably could last till the end of the year. So this could become really long action. A few months probably will drop here. The reaching of this neckline, if you apply the same speed of the dropping here, it will be right to the moment where European Central Bank should start rising rate. So the approximately will be sum of the 2019. Here's rally could happen. That will be the right shoulder market. So this probably will be interesting for those of you who are trading on fundamental background, using the equities, keeping the equity portfolio. So this is very important, guys. And definitely it has relation to situation on the currencies. That's why, as I said, hardly the story with the tariffs and in general situation in European fundamental background, hardly it will be finished very soon. So definitely we will get some continuation. But currently it's very difficult to say what the price shape will be formed on the high time frames. That's why let's go step by step. So we have created the trading plan for today's session. Let's see what will happen.